House revoting on the tax overhaul bill, expected to pass it easily this morning. There's a technicality they had to fix.
Yeah, but it's still expected to go through. So we're here to break it down for you to see what changes that you will see come tax time. How does it affect you and your family?
So if you have a couple of kids, if you're making a certain amount of money, are you going to get more money? It's anyway, we're going to break it down. Stick around.
The Tax Cuts and Jobs Act is passed.
All right, so Congress votes for those sweeping tax cuts, the tax bill making deep cuts to corporate taxes and lowering individual tax rates for a set period of time. There is some housekeeping to be done today before this bill can go to President Donald Trump for his signature, but everybody's thinking it's going to sail through.
Yeah, and the question, though, on everyone's mind, how much money will I save on my taxes? How will it affect you and your family? So we have a certified public accountant, Bob Hockensmith. The money guy is here to break it all down.
The money guy.
Yeah.
I love that. That's good stuff, Bob.
You like that?
I do like that.
But that's
good.
what people want to know is, you know, I want to know what this is going to look like, my paycheck's going to look like, and what, when I go to file taxes, what that will look like.
And you got scenarios for us.
I do. I have 4 scenarios.
All right, let's go through them.
All right. Well, the first one shows a single person earning around $50,000 a year. No mortgage, they're renting, which is what we see with the millennials and so forth, right? Okay. So the old tax law, they would have been paying about $5,500 on that $50,000 bill. Well, this new tax law, $4,370.
Oh, wow. So over $1,000.
Okay.
Big savings.
Yeah.
So they don't have any kids they're worried about. They're not deducting the mortgage interest or anything like that. And that's pretty straightforward.
It is. It really is.
Kind of just entering adulthood.
The tax return preparation will even be simpler because of that. The tax forms and such.
Sure.
Okay.
Example 2.
Example 2 is a married couple with children, right? And the kids are under 17, which is typical, and they have a mortgage, and they're earning about $100,000 a year. Well, the old tax law, $9,700. Check out this. The new tax law, $4,800.
Wow.
Almost half.
Huge.
Yeah, almost half.
Is that because of that child credit?
That's exactly it.
Okay.
Yes. Senator Rubio said he wanted that $2,000 child credit. Of that $2,000, $1,400 is refundable, which means you could literally get a check back from the government, possibly, of that $1,400 per child. So that really cuts it in half.
Wow, that's a decent savings.
And really quickly,
there.
so the tax credit then is something that comes directly off what you owe in taxes.
Yes.
So that's
Credits
a big savings.
are always better than deductions.
Right.
To give you an example, if you could spend $1 and get a $3 benefit, that's a great deal.
Sure.
That's what credits do. $1 in tax credit is equivalent to about a $3 tax deduction. It's a good deal.
Okay.
Yeah.
Okay, good. Example 3.
Example 3, you've got a retired couple on Social Security, and they earn about $40,000 in some type of retirement income, right? Okay. So the old system was $4,600 in taxes. The new system, $3,600.
About another
$1,000 savings, right?
Okay, and a married couple doing pretty darn well. Let's see our last one here. What are they?
Last one, you've got $200,000, annual earnings of the married couple, no kids, right? These people are going to have a $33,000 tax bill on the old system, a $30,000 tax bill in the new system.
So that's $3,000. That's still significant.
In every one of these instances, people are paying less. And I asked you before we came out here on camera, somebody's got to pay more, right? At some point. Who's paying more?
The millionaires. The millionaires are going to pay more. Now, a lot of people will say, from an absolute perspective, they're going to pay more, but from a percentage perspective, they're going to pay less, is what they say, because the old tax bracket went up to 39.5%.
The very top bracket.
The new tax bracket is now 37%. Okay. So a lot of people are thinking, no, they're not paying as much in taxes. But if you look at the check they're writing, they're actually paying more.
Yeah. And then you said also, before we let you go, businesses, corporations, this is definitely good.
Huge benefit for businesses. About 95% of small businesses are what they call pass-throughs, like S corporations and partnerships. They get a huge, huge benefit as well. And then you got the corporations, you get to write off the equipment they buy right up in the first year instead of waiting 5, 6, 12 years to do it. Okay. Then when businesses are bringing money back into the United States, and that's a big one, the repatriation of money, if you bring cash back in, you pay 15% tax instead of 35%.
So that's why corporations are parking these billions and billions of dollars over. When you make money overseas, if you want to bring it back here to invest, you have to pay a huge tax on it.
35% tax.
Right, as it is right now.
This is going to be huge because they're going to pay like 8% if they buy equipment with that money they bring back.
How do people find you if they want to find you?
azmoneyguy.com, like AZ Arizona, azmoneyguy.com, and I'm right there.
You were good.
Thanks.
Nice talking to you. Welcome back anytime.
Andrea,
take care.